If you'd like to see more of our videos, please subscribe to our channel on YouTube or follow us here on Instagram. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today's December 4th, 2019. And today is Wednesday morning, so looking at the major economic events of the day, starting out at 5 p.m. South African time. Out of Canada, we have the Bank of Canada rate statement. This is a major number, major event today, so just you do want to know about it. We'll go over the Canadian dollar just a moment. Now, at the same time, simultaneously at 5 p.m. South African time, out of the United States, we have ISM, non-manufacturing PMI number coming out. Also a very important number. The last time we had a non-manufacturing PMI number coming out did shake and rattle the market, so it is an important number, especially since we've seen such a big sell-off in the Dow. Now, looking at the markets, the currencies, euro is still hugging on resistance, not breaking higher. We're going to look at a couple of alternatives that can unfold, okay, in today's trading. Now, looking at the Canadian dollar, also very much unchanged before this rate statement. Now, looking at the Dow Jones, we continued sliding for a second day. Okay, we've sold over 6,700 points from our all-time highs of 28,160-ish level to 27,400-ish level. That's in a big retracement for the Dow. We're going to take a look at a couple of options there. Now, looking at the commodities, gold as a response to the Dow Jones sliding does the opposite. Always has the inverse relationship. Gold actually rallies to resistance to 1480-ish level. We're going to take a look at that as well. And lastly, looking at stocks, Google remains strong despite the fact that the Dow Jones sold off yesterday and Intel's falls at resistance. So we're having like a little bit of a mixed bag in the stock markets. But let's take a look at the markets and see what we can expect from today's trading. So we're jumping here into the Euro USD at a 4-hour chart. You can see that we're hugging this resistance level at 110.79-ish level right there. And ultimately, okay, a few things could happen here. Okay, we are at resistance. The dollar has actually gotten weaker, okay, despite the fact that the Dow Jones is actually sold off. Okay, usually the dollar gets stronger. So this inverse relationship with the euro is not happening. Okay, however, you do want to know that if the Dow Jones does make a little bit of a comeback, we may see this actually continue to rally. So this little rally of the euro is something that is completely isolated to the euro, not to the dollar. Okay, so the euro really just getting stronger, despite the fact that the dollars actually should be getting stronger as well. Now, we're really hugging this threshold at this 110.79-ish level. If we do break above it, we see some momentum, we could definitely hit 11.79, because this has been, okay, this area has been one of the tightest ranges I remember for a 3-month period for the Euro USD. Okay, we've been in a very tight range. We haven't gone a lot of pips, okay, even from this pip down here from 110, okay, to 110.79. That's only 80 pips, okay, so we're relatively in a very tight range in the currencies of late, okay, and that's why I've been most focused in the U.S. stocks and stock exchange in general, because that has really been the more volatile market. Now, jumping into the Canadian dollar, and this is a news event happening later today. We're looking at a daily chart. Let's look at a 4-hour chart just to give you a perspective of it. We're closing in at that resistance, okay, at this 133.26-ish level right up here, and then it does look like it's making itself a new trading range for now. Okay, now a couple possibilities can happen when this rate decision comes out today. It's more unlikely that it'll break above this area of this 133-ish area. Let's clean it up so you can see it a little bit more clearer. Above this 133.26-ish resistance, it's less likely it's going to break above it. However, in the event that it does happen, okay, it could definitely rally much more. But before we look at how much it could rally more, just realize that we are at this top of the range. Your support level is 132.76-ish level, so it does break that. We could definitely see it getting stronger versus the USD to 131-ish level. Now, to look at what possibly could happen if it does break above this 133.26-ish level, we could hit back to 134, 135. Okay, so with that said, today is a major area. Okay, now this has been a choppy kind of trading symbol. As you can see, we've been very much in a trading range, very respecting a trading range, and we're hitting that range, the top of that range right now. So this is really a very significant resistance area. Okay, and this is why I say if it does break above it, you do really want to get involved in it, because that is major. Now, looking at gold in response to the Dow Jones selling off, we're rallying to this 1483-ish level, excuse me, and this also is at a major threshold. Okay, the Dow Jones hasn't sold off this sharply in quite some time. So with this said, if we do retrace here, we could see the Dow actually bounce, okay, for rallying and getting back onto track, quote unquote, because most of the stocks, yes, they did gap down, but they rallied, okay, which is more of a bullish kind of sentiment than a bearish kind of sentiment. It's more of a sentiment that it's going to go up than it's going to go down. So if this does falter at this 1484-ish level, we could expect the Dow Jones to actually rally. Now, jumping into that Dow Jones, let's look at it. This is the massive sell-off that we had since Thanksgiving, the day after Thanksgiving. From Friday, we started selling off, and then Monday and then Tuesday we're right back here to 27,433. Now, altogether, this was expected, okay, a certain sell-off. Now, I expected it to be after the new year. I thought we would continue rallying into the end of the year, but that could still be, okay? We are at a certain resistance-ish level at 27,433 right here, okay, as this has been a previous resistance, maybe subsequent support at this area. Now, the reason I say that, and I'm still bullish on the U.S. markets, if we look at Google, yesterday we actually rallied up, okay? We did sell off, and we did gap down, but we rallied and we're above that resistance-ish level. So the stocks are still buoyant. Look at JP Morgan, same story, okay? You see a green bar, okay? This is what I'm talking about. It didn't close the gap yet, but it did bounce, okay? So this may be a dead cat bounce. Looking at Microsoft, same story, okay? So looking at the stocks, they're still very strong and they're still buoyant, okay? However, there are some things that could take us lower. If we look at Intel, though, okay, we're right there at that resistance level, and we faltered. We're trading at $56 flat and not breaking above it, okay, which is not very encouraging to be going on the upside. With this all said, the market is still in kind of a rotational area right now, mostly because it's responding emotionally to some of the tweets that President Trump has been saying about the China and U.S. tariff war, so on and so forth. So many things could still unfold, but rationally, we're still strong, okay? So I do expect the markets to still rebound at a certain point before the end of the year. This is Fred Razak, and I wish you guys a great trading day. Thank you.